Okay, let's unpack this. POLYRIZON LTD, ticker symbol PLRZ. Around May 3rd, 2025, it was just, well, a roller coaster.
Absolutely. You saw the stock price swing wildly, right? From around, what, 25 cents?
Yeah, something like that. All the way up to nearly $1.20. And these weren't gradual moves either. We're talking trading halts.
Exactly. Which always makes you wonder, what's really driving that kind of extreme action, especially in biotech?
Right. What's the underlying story with this company? That's what we want to figure out.
And that's why this deep dive is interesting. It's a snapshot of the volatility inherent in this sector, especially for development stage companies.
Precisely. And that's our goal today. We've gathered a stack of research on PLRZ. There's a detailed deep value analysis from early May 2025, plus various financial news, other reports.
So the mission is to cut through the noise.
Yep. Sift through it all, pinpoint the core drivers behind this volatility. We want to get you, our listener, informed quickly and thoroughly. Understand the business, the financials, market perception, without drowning in jargon.
And it's a good case study, isn't it? Looking at POLYRIZON shows the kind of potential risks and maybe rewards in early-stage biotech. Those price swings really show the power of hope and uncertainty.
So here's the plan for this deep dive. First, we'll dig into POLYRIZON's actual business. What are they trying to achieve?
Then management. Who's in charge?
Exactly. Then the financials, the numbers behind the story. After that, in the second half, we'll tackle market sentiment, ownership, and wrap up with a solid risk assessment. Ready?
Let's do it. Starting with the business itself, what's POLYRIZON all about?
All right, Chapter 1, Business Understanding. POLYRIZON is an Israeli biotech, and the key phrase here is development stage.
Meaning, no revenue.
Zero revenue, as of May 2025. They're focused on innovative hydrogels delivered via nasal sprays. Two main platforms. First is Capture and Contain, CNC.
Okay, capture and contain, like a barrier.
Think of it like a biological mask you spray in your nose. It's a hydrogel, uses things like seaweed polysaccharides, apparently, designed to physically block airborne viruses and allergens from reaching your nasal tissues.
Ah, so it's a physical block, not a drug reaction.
Right, and because of that, they expect it to be regulated as a medical device by the FDA.
Which could be a different path than a typical drug. Interesting. It's proactive, trying to block the problem before it starts.
Their lead candidate under CNC is PL14. This one targets allergies. They're aiming for the FDA Class 2 510K pathway.
The 510K, that's generally for devices considered substantially equivalent to something already on the market, right? Potentially faster.
Exactly. Saves time and money if they can make that case. They've had some positive initial safety results in human nasal tissue models, planning preclinical safety studies soon, maybe Q2 2025.
And then human trials.
Pivotal trials targeted for Q4 2025. But big caveat, all depends on funding and FDA agreement. They do have a manufacturing deal with Eurofins CDMO for trial supplies.
Okay. What else is under CNC?
There's PL15 for COVID-19 and PL16 for influenza. Similar idea, blocking viruses. But these are further behind, looking at the FDA Class 2 de novo pathway.
De novo. That's for novel devices, lower risk, but no direct equivalent out there. Still needs solid data.
Right. And their trials are slated for 2026, 2027, again, heavily dependent on getting more funding.
So different strategies for different products based on novelty makes sense.
Hey.
What's the second platform?
That's Trap and Target, or TNT. It's earlier stage.
Yeah.
The idea here is using their hydrogels to improve how actual drugs, APIs, active pharmaceutical ingredients get delivered to the nose.
How would that work? Better absorption.
They're aiming for better bioadhesion, making the drug stick around longer in the nasal cavity, like Velcro and sustained release. Because it involves a drug, this one's expected to be regulated as a combination product.
Under which pathway?
Likely the 505(b)(2) pathway. This lets them use existing data on the drugs they're delivering, potentially speeding things up compared to developing a totally new drug.
That's a common strategy. Leverage existing knowledge. What drugs are they looking at?
A few targets mentioned. Naloxone for opioid overdose. They're even working with the University of Parma on that. Benzodiazepines for epilepsy. Psychedelics, they have a letter of intent with an unnamed partner. And maybe corticosteroids.
Interesting range. But the 505(b)(2) still needs them to show their delivery method is a real improvement, right?
Definitely. Now, size-wise, POLYRIZON is tiny, microcap. Still just development stage, no product selling. And reports suggest maybe only like 1 to 6 employees.
Wow, that is small. Really underscores the risk. Totally reliant on R&D success and funding.
So the value proposition boils down to the potential of these nasal sprays. CNC offers a possible drug-free barrier. TNT offers potentially better drug delivery.
Okay, let's look at the industry context. Nasal sprays are big business, right?
Huge. Tens of billions globally, growing maybe 6–9% annually. Drivers are things like more respiratory problems, pollution, people wanting non-invasive options. Allergen blockers and nasal drug delivery are seen as growth areas.
But the competition must be fierce.
Absolutely intense. You've got the giants, GSK, Bayer, Pfizer, you name it, plus others specializing in nasal barriers or delivery tech, like Nasalese or Aptar. POLYRIZON needs something truly special to stand out.
Yeah, a clear differentiator and probably a clever market strategy that can't just outspend the big guys.
And then the regulatory maze. We mentioned that pathways 510K de novo 505(b)(2). Each is complex, expensive. Getting positive signals from the FDA, especially for PL14, is critical.
What about those 2025 U.S. tariffs? Any direct hit?
Seems mostly indirect. The analysis suggests the biggest worry is economic uncertainty tightening up funding. Maybe higher costs if their manufacturer Eurofins imports tariff materials, and just generally could make partnerships harder to forge.
Yeah, indirect effects on funding and partnerships can really hurt small companies relying on outside capital.
And the barriers to entry here are high. IP protection, clinical trial costs, regulatory hurdles, manufacturing scale-up, needing lots of capital, getting market access. It's a long list.
Which brings us to the economic moat. Do they have one?
Not really, not yet. Their moat is entirely potential based on maybe creating one someday with their proprietary hydrogel tech and patents. It's a big if. Think of it as betting on them building the castle, not defending an existing one.
Right. Unlike Cook's brand, their moat is speculative. Depends entirely on the tech proving unique and hard to copy. A major uncertainty.
Okay, that's the business. Let's shift to Chapter 2, management. Who's running this tiny company with big ambitions?
The CEO is Tomer Israeli.
He's got a long history there, right? Founded it, left, came back in 2020, led the IPO and the recent private placement. But he's also dealing with that NASDAQ non-compliance issue right now.
His long tenure shows commitment, perhaps. But the lack of commercial success over that time raises questions, too. How he handles the NASDAQ issue will be telling.
Then there's the chief scientific officer, Dr. Ayel Esran. His resume looks impressive.
Yeah, over 30 years in drug development, devices, biomaterials, involved in past FDA approvals, successful company exits worth supposedly over $1 billion. He's also on the board at Amacathera. Seems highly relevant expertise.
Definitely adds scientific credibility. The rest of the team covers the usual bases: CFO, CTO, HR, regulatory. Average tenure seems okay. Some newer hires, though.
Dr. Ron's experience could be absolutely crucial for navigating the FDA.
Speaking of navigating challenges, crisis response. That NASDAQ minimum bid price notice from April 2025 is the big one. They need to get the price above $1 by October.
Did they do a reverse split? That's common?
They announced one, but then canceled it, which is interesting, maybe optimistic. On the plus side, they did manage to raise $17 million in a private placement recently.
Canceling the split is a bold move. Could signal confidence or maybe trouble getting it approved. The $17 million raise, though, even if dilutive, is vital fuel. Shows they can still access capital.
How about communication? Transparency?
Well, they followed the rules for a foreign private issuer. Annual 20F event-driven 6Ks, press releases. But that's less frequent reporting than U.S. companies.
Any ethical red flag?
Doesn't seem like it. They have independent directors on the board. Insider ownership is really high, though, which means less frequent updates for investors, potentially. High insider ownership aligns interests, maybe, but also concentrates control.
Okay, capital allocation. Where's that $17 million going?
Mostly R&D, seems like. Preclinical, clinical studies, patents, general admin costs. That's what the placement was stated for.
No M&A?
Doesn't look like it. Focus seems to be on collaborations. The psychedelics LOI, Clearmind, University of Parma, Eurofins for manufacturing.
And obviously no share buybacks or dividends.
Yeah, not at this stage. And metrics like ROIC, return on invested capital, meaningless when you're just burning cash. Success depends entirely on the pipeline delivering down the road.
Right. Their capital use is all about getting those products further along. Which leads us to Chapter 3, financial health, the numbers.
Or lack thereof on the revenue side. Market cap is tricky.
Super volatile. On May 3rd, maybe around $40 million based on a $1 share price, and roughly 39.8 million shares post-placement. But the research notes it's been all over the place, from barely over $1 million sometimes up to $13 million or more on other days.
That wild fluctuation just screams speculation, and that share count might change depending on warrant details from the placement.
PE ratio, non-existent, they lose money. Revenue growth, 0. Profit margins, deeply negative.
How about debt?
Seems low. More cash than debt after the placement. Free cash flow, negative, obviously. They're spending, not earning.
But we don't know the burn rate, how fast they're spending that cash.
The report didn't specify. That's a huge missing piece for figuring out their runway. Price to book is also all over the map, reflecting the volatile price and book value being mostly cash and intangibles.
So cash runway is critical but undefined. Big risk.
Looking at stability, well, they've consistently lost money since starting. Typical for developmental biotech, but still a fact. No dividends, minimal debt, mostly equity funded.
Working capital, liquidity.
Looked okay after the cash injection. High current and quick ratios, but that's just immediate liquidity, not operational efficiency. The core financial worry is simple. Running out of cash before they hit milestones or find more funding. That's the going concern risk.
Yeah, that strong cash position is temporary. Doesn't solve the underlying problem of continuous losses until something gets commercialized.
Okay, we've hit the business, management, and financials. Let's take a quick pause here. When we come back, we'll dive into market sentiment, ownership, and the all-important risks. Welcome back. We're continuing our deep dives into POLYRIZON LTD, PLRZ. Now for the second half, starting with Chapter 4, Market Sentiment. And the word that keeps coming up is speculative.
Extremely speculative, I'd say. That volatility we talked about, it's the prime evidence. Huge price swings, trading halts.
Plus the NASDAQ non-compliance hanging over them. It feels like sentiment just whipsaws based on any news.
Definitely. It suggests trading driven by short-term catalysts and bets, not long-term fundamentals.
And interestingly, no analyst price targets found in our research.
Not surprising for a microcap like this. Lack of coverage from the big firms.
Let's look at how news hits the stock. Positive stuff, like that early safety study for PL14, price seems to jump.
Right. And negative news, like the NASDAQ notice, price tanks.
Even mixed news, like the private placement good for cash, bad for dilution, seems to cause big reactions. The market is hypersensitive.
It really highlights how information, even preliminary data, fuels speculation in these early-stage biotechs.
Now let's talk short sellers. This is fascinating. Short interest is really high.
How high?
Around 22.5% of the float, apparently. And it increased quite a bit in early 2025. Plus, the cost to borrow shares to short them, extremely high.
Like what kind of rates?
Reported between 55% and 77% annualized. That shows real conviction from the shorts that the price will fall.
Wow. That's incredibly expensive. Suggests strong bearish sentiment. Any other signs?
Significant short volume activity noted, sometimes over half the volume on certain days being off exchange. Even some fails to deliver instances reported. And no options market seems to exist.
High short interest, high borrow cost, no options. That points to a very negative speculative view. It's seen as a trading vehicle with deep skepticism underneath. Though high short interest could theoretically set up a short squeeze, adding more unpredictability.
Okay, so sentiment, negative, speculative, volatile. Now, Chapter 5, ownership structure. Who holds PLRZ shares?
Well, institutions don't seem too keen yet.
Very low institutional ownership, around 1.9%, suggests the big money isn't convinced or maybe just hasn't looked closely yet. Although the private placement involved institutional investors, so that percentage might tick up slightly. We don't know who they are, though.
Yeah, typical for microcaps. They wait for more de-risking usually.
But insiders, they own a lot.
How much?
Around 50.76% reported. CEO Tomer Israeli holds about 2.8% himself. That's significant control.
Can be good and bad, right? Aligns interest potentially, but also concentrates power.
Exactly. Ownership seems highly concentrated overall. The public float looks pretty small, which can make those price swings even bigger.
That small float definitely contributes to volatility. Small trades can have a big impact.
And what about governance related to ownership? They're a foreign private issuer.
Right, FPI status. That means less frequent reporting annually, not quarterly like U.S. companies. Exempt from some U.S. proxy rules, maybe some insider reporting rules too.
So potentially less transparency for investors.
It can create information asymmetry. Yes, you get less detailed info less often. They have independent directors, but insider control might limit their influence, and shareholder rights fall under Israeli law.
Okay, good points. Let's move to the final chapter before we conclude. Chapter 6, Risk Assessment. Biotech, it's early stage. There are risks.
Plenty of them. The analysis used a SWOT framework: strengths, weaknesses, opportunities, threats.
Strengths were things like the proprietary tech, market potential, patents, experienced CSO.
Weaknesses: development stage, no revenue, cash burn, NASDAQ issue, volatility. Usual suspects for a company like this.
Opportunities: unmet needs, partnerships, maybe good clinical data, regulatory approvals.
And threats: clinical failure, FDA rejection, intense competition, funding drying up, delisting, IP challenges, maybe even those tariffs indirectly.
It's a balanced view, but the threats and weaknesses seem very immediate.
Absolutely. Let's dig into a few key risks. Clinical and regulatory are huge.
Yeah, the failure rate in biotech is notoriously high. They need solid safety and efficacy data for complex FDA pathways. Delays or rejections are always possible.
And the financial risk, the going concern risk, they need more money eventually. The recent placement buys time, but how much? Future funding rounds could mean more dilution. Running out of cash is a real danger.
Competition, too. Going against big pharma with deep pockets, that's daunting.
Definitely. And the stock volatility itself is a risk. Makes future capital raising harder, and the delisting threat is serious.
Even the tariffs, while maybe indirect, add to the uncertainty, especially around funding and partnerships.
And these risks are all linked, aren't they? A clinical setback makes funding harder. Market volatility hurts capital access. It's all interconnected.
Okay, Chapter 7, conclusion time. So, wrapping up this deep dive on POLYRIZON, what's the takeaway?
It's a company with interesting tech, no doubt. Those hydrogel platforms have potential, but
the risk profile is extremely high right now. Development stage, no revenue, burning cash, facing intense competition and regulatory hurdles.
exactly. Based on everything we've seen as of early May 2025, it doesn't fit the mold of a traditional value investment. Way too speculative for that.
We've laid out the risks pretty clearly, so thinking about those wild price swings we started with and the high stakes here, here's a final thought for you, the listener. When you see these high potential but super high risk opportunities, what's the single most critical factor you focus on in your own evaluation?
That's a great question for reflection, because ultimately understanding your own risk tolerance and doing deep, thorough research are paramount with companies like this.
Absolutely. It comes down to your comfort with that level of uncertainty and how much homework you're willing to do. What are your key lessons from this? We hope you'll think about that.
And if you found this breakdown helpful,
Yeah, if this deep dive into POLYRIZON shed some light on what drives these volatile stocks, please consider subscribing to the Stock Analytics AI YouTube channel. We do more analyses like this.
just a reminder for everyone listening, this discussion is based on the information available around May 3rd, 2025. Things can change quickly, especially in biotech.
And critically, this is not financial advice. It's for informational purposes only. Always do your own research, talk to a qualified financial advisor before making any investment decisions.
We should also mention that AI tools assisted in processing and summarizing the source materials for this deep dive.
Right, and all those sources are listed in the description if you want to dig deeper yourself. Thanks for tuning in.